Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karamali, live from Yahoo Finance's studios in London. It's Monday, 6th October. Coming up on the show, the federal shutdown enters another week, but equities look poised to build on their recent strong run. France's Prime Minister resigns after less than a month in the post. French stocks plunge. And gold hits another record high. So grab your coffee and let's own the morning. Well, the first thing you need to know is that the government shutdown has entered another week. Over the weekend, White House economic advisor Kevin Hassett said that layoffs for federal government employees will begin if President Donald Trump decides that negotiations to end the government shutdown are going absolutely nowhere. But he also expressed optimism that the current impasse could be overcome. Later today, we're expecting another Senate vote. The next thing you need to know about is political changes in France and Japan that are having very different impacts on the markets. Over the weekend, Sanai Takaichi was elected the leader of the ruling Liberal Democrats, which means she will likely be the country's first female prime minister later this month. Japanese stocks surged to record highs and the yen weakened sharply against the dollar as investors placed bets on what is being dubbed the Takaichi trade of more fiscal stimulus. But in France, Prime Minister Sébastien Lecornu resigned earlier this morning, less than a month after his appointment. In fact, his cabinet lineup was only announced 14 hours prior to the government's collapse. That sent France's main benchmark CAC 40 lower as concerns over this dysfunction in the Eurozone's second largest economy grew. Lecornu is a close ally of President Macron, but his new cabinet lineup had angered opponents and allies alike, which led to this swift and unexpected resignation. French banking stocks led the declines on the markets, while French bond yields rose and the euro fell against the dollar. And the last thing you need to know is that gold hit yet another record high, the price now really zeroing in on the $4,000 an ounce mark. This surge is down to expectations that the Federal Reserve will cut interest rates further this year and the fact that the US government shutdown continues to drag on. The precious metal is now up almost 50% year to date. And remember, I told you all about the debasement trade on Friday. That's when investors shun major currencies and instead buy both gold and Bitcoin together. Well, Bitcoin over the weekend, it climbed over $125,000. Well, to help us unpack all of these stories and more, I'm joined by Janet Mui, Head of Market Analysis at RBC Brewin Dolphin. Janet, thanks so much for joining us. Let's start with this shutdown. It doesn't seem to be putting off investors when it comes to buying US stocks. Why do you think that is?
Hi, good morning, Ramzan. Thanks for having me. I think the reason is because investors are overall thinking that this is likely to be temporary and is likely to have minimal economic impact. In fact, if you look at past shutdown, it really has limited economic impact and market impact on average. So I guess the market is just having seen this movie many times, they're not reacting too much. And also, I think the key driver for US equity markets remains firmly on artificial intelligence. And particularly, we've seen so many mega deals in the AI ecosystem. So that is serious, the main driving force of the US market, and it is basically intact for now.
But don't you think without for instance, we didn't get jobs numbers on Friday, without that data, are investors sort of a bit blind in terms of what they can predict?
A little bit, but not all, because we still have private sector surveys and data that is available, which ultimately is pointing to softening in the US labor market, but overall not falling off a cliff. I think that's a very important message. As long as the US labor market is just softening and still overall regarded as manageable and resilient, I think the market still has reason to grind higher. Particularly softening labor market further reinforces the case of further Fed rate cuts.
And Janet, let's turn to France now. And it was a bit of a surprise this morning to see the new French Prime Minister and his government resign. How worrying is this? I mean, France's political upheavals, they're nothing new really, right?
I do think it is starting to get more worrying because you're right that it is nothing new, but we have seen a couple of changes in the prime minister already. And there seems to be this political gridlock that is impossible to break. And I think markets are worrying that even if President Macron appoints another prime minister, it's going to be the same. There's no breakthrough in how to pass a new budget, which ultimately just means political gridlock, fall in economic confidence, fall in business confidence, and really hurt the whole market sentiment. And ultimately, I think markets really worried that eventually a new election has to be called to break this gridlock.
But it was a bit of a different story in Japan. We expect a new prime minister to be appointed later this month, and she's expected to introduce more fiscal spending and pressure the Bank of Japan to keep rates low. Is now the right time to be looking at Japanese equities even more closely?
Yeah, it's a very different sentiment there in Japan. But overall, I think the drivers are a bit different. So we saw a big depreciation in the Japanese yen, which tend to boost Japanese exporters. And markets are expecting potentially more fiscal stimulus because the new leader is pro-stimulus, and she also wants to call for lower interest rates. So overall, this is stimulative for the economy, which ultimately is good for the markets. But I think the concern is that at the end of the day, that would be more government borrowing potentially, which again comes back to the concern of fiscal sustainability, a wider fiscal deficit. But the beauty in Japan is that at least only a small part of the Japanese government bond market is owned by foreigners. So it is arguably less of a concern compared to France, which about 50% of the bond market is owned by foreigners.
And Janet, on Friday on our show, I spoke about the debasement trade where investors shun major currencies in favour of buying gold and silver together with Bitcoin. Do you expect to see this kind of trade continuing?
I think so. I think what we have seen, well, with regards to the shutdown in the US government, with regards to what's happening in France and Japan, ultimately is a collective theme, which is that it is very hard to cut spending, and it's very hard to increase taxes. And after all, government will have to borrow more. So it is ultimately a fiscal sustainability issue, which ultimately could lead to central bank just printing more money, and that leads to monetary debasement and inflationary consequences over the longer term. And in such an environment, as we see many more of that evidence happening globally, I think buying gold and real assets will still be a trade that will continue.
Janet Mui from RBC Brewin Dolphin, many thanks for your thoughts. Okay, we've got some breaking news now, and it's Merger Monday on Wall Street. The deal is in the banking sector, first of all. Fifth Third Bancorp is acquiring Comerica in an all-stock deal valued at $10.9 billion. This tie-up between the two regional banks will now create one of the country's largest banks by assets. It will be the 9th largest bank with $288 billion in assets. Shares of Comerica are surging on the news while Fifth Third is under pressure. Coming up on Morning Brief Market Sunrise, Tesla shares are rising ahead of the opening bell on Wall Street, the company teasing an event on X. We have the details on what you can expect. Plus, President Trump is gearing up to announce billions of dollars in payouts to American farmers. You'll hear how one farmer feels about it next. Well, it's time now for today's trending tickers and breaking news. Shares of AMD, well, they're skyrocketing this morning thanks to OpenAI. The two companies reaching a deal that could have OpenAI taking a stake of 10% in the chipmaker. They are also announcing a massive computing partnership. It's a collaboration on AI data centers, with OpenAI committing to purchasing 6 gigawatts of AMD's MI450 chips. The deal is AMD's biggest challenge to Nvidia's dominance in the AI space. Nvidia shares are under pressure on news of this deal. Tesla shares, well, they're set to open higher. The electric vehicle maker is teased an event for Tuesday with a pair of posts on X, which suggests there could be some kind of product launch. Investors and analysts have been waiting for the debut of Tesla's lower-cost version of the Model Y to help maintain sales momentum, and it's been years since Tesla debuted a new vehicle. In June, the company said it would start selling the car in the fourth quarter, but would ramp up output slower than planned. Now, Tesla is getting a boost for third quarter deliveries as the US electric vehicle tax credit expired at the end of September. But most analysts believe that without the tax credit, sales will slow down. And check out shares of Critical Metals Corporation. The stock is soaring on a report that the Trump administration is considering taking a stake in the rare earth mineral company. Reuters saying the stake would be roughly 8%. Critical Metals purchased a deposit in Greenland last year for $5 million cash and more than $200 million in stock. The government has recently announced investments in other rare earth firms, including Lithium Americas and MP Materials. But as you saw there, shares there up almost 76%. Okay, now President Trump is expected to announce a bailout of American soybean farmers this week to the tune of roughly $10 billion. While that may be short-term help for struggling farmers, one farmer told Yahoo Finance it wouldn't address the root of the problem: tariffs. Soybean farmer Blake Hurst spoke with Josh Lipton on Market Domination. Here's some of that conversation.
The fourth quarter is upon us, and October has a volatile reputation in the markets, which it has earned. It's where the pressure tends to build and where it often releases in many years, letting the markets sail into a year-end soft-bedded Santa Claus rally if history repeats itself. Today in Stocks and Translation, we are breaking down the volatile seasonal tendencies of this storied fourth.
I want to start off kind of bigger picture, Blake, because I'm curious to hear how the American farm economy is doing right now, Blake. You know, broadly, how is it holding up? What is your sense?
Well, we're overall farm income is down slightly, but that's a tale of two different economies. Livestock, particularly cattle, are doing very well. Crop farmers like our farm are operating at a loss.
Why are you operating at a loss, Blake?
Because our prices 3 years ago for the bushel of corn was $7. Today it's $4. Our costs have remained the same. Same percentage drop for soybeans, or probably a little worse. So we've seen a tremendous drop in our profitability.
And Blake, my understanding is that in particular, it is the soybean farmers like yourself who are having a particularly challenging time. Is that accurate?
Oh, absolutely. Over the past few years, China has purchased 25% of U.S. soybeans. This marketing year, which starts in the fall, October 1st, they have contracted for zero. So we basically, by a typical year, 10% of our crop would have been marketed to Chinese buyers. This year, we've sold zero. So that's obviously weighing on prices and makes a real concern about how we're going to even have room for this year's soybean crop. It's a good crop in much of the Midwest. We had a very favorable summer, but we're faced with low prices this fall.
So put some math on this for me, Blake. You will sell your bean crop for about what a bushel, you think?
Well, today, right around $10, and that's just barely break even on soybeans. Again, 2 or 3 years ago was $13 or $14 a bushel. So farming is cyclical, and this isn't our first rodeo with a drop in prices, but it has definitely been made worse by the trade war with China.
Let me ask you, Blake, if President Trump can cut some type of deal with Xi and get the Chinese to buy U.S. soybeans, what would that mean for your farm and for the industry?
Oh, it would be a tremendous boon to the industry if we got a deal. Of course, if we hadn't put our tariffs on in the first place, we wouldn't have needed a deal. We would have been operating in the normal market economy, but that's not the route we decided to take, and farmers are paying the price.
Well, here's, Blake, maybe, the Trump administration, I'm guessing, might put it something like this. They might say, Blake, what we're trying to do is, it's big, it's historic. We're trying reform the global trading system, and there's going to be some short-term pain, but longer term, the objective is to put American industry and American farmers on firmer, fairer ground with stronger trade deals. What do you say to that?
Well, we put the first round of tariffs on China in 2018 during the first Trump administration. The Biden administration kept them in place. We've had 7 years to see how this experiment's going to work out, and so far it's a complete bust. There's no other way. There's no other way to put it. We have seen the administration announce a couple of trade deals. The most recent one with Taiwan, and they said, by golly, we're going to sell Taiwan $10 billion of agriculture goods in the next 4 years. The problem is, in the last 4 years, they bought over $12 billion. So the deal that they're trumpeting is no better than the status quo. So far, we have not seen those results. So far, we have not seen an improvement in our position as exporters.
Let me ask you, Blake, the Journal is reporting here that Trump is considering $10 billion or more even in aid to farmers. What would you make of that possible response?
Well, if he sends me a check, I will spend it. But it seemed rather, it's crazy when you think about it. We put on tariffs, collect money, and then we take that money, which we've collected from American consumers, including farmers who buy imported goods. We take that money and give it to the industry that's been hurt by those very same tariffs. Seems to me that it would make a lot more sense to get rid of the middleman, drop the tariffs, and again, resume normal trade relations.
Coming up on Morning Brief Market Sunrise, the future of the AI trade. OpenAI hosting its third Dev Day, and investors will be watching to see what it means for the company's key partners. Welcome back to Morning Brief Market Sunrise. Here's a look at what's moving markets this morning. Well, oil prices are rising on the heels of the OPEC Plus meeting on Sunday. The group raising production levels, but not as high as some analysts feared. It will produce 137,000 barrels a day in November, which is the same level as October. The cartel has been losing out to producers in the Americas, namely the US, Brazil and Guyana. This coming after a rough week for the oil market. Brent crude was down more than 8% and WTI was down more than 7%. And in Asia overnight, a read on the AI industry has Honhai reported earnings. The company, also known as Foxconn and a key partner to Nvidia, posted 11% sales growth, which was roughly in line with analyst expectations. It expects sales to rise in the current quarter thanks to healthy AI demand. Now, Foxconn is a major server production partner for Nvidia, and it's also a key partner for Apple, and the ramp up for the iPhone 17 launch helped support the consumer segment. The broader AI trade will be in focus as OpenAI hosts its Dev Day, and it comes as OpenAI announced a massive partnership with chipmaker AMD ahead of the event. Speculation online suggesting the company will unveil an agent builder among other announcements today, and it comes after a blog post from the company last week detailing how it has developed AI-based tools for internal use for tasks like streamlining, research, and making contract documents searchable. That news weighed on several software stocks last week, and it highlights how the largest private company is having an outsized effect on the public market. OpenAI's Dev Day event kicks off at 1 p.m. Eastern Time in San Francisco. Amazon founder Jeff Bezos making headlines after his comments about a bubble in the AI trade, while Yahoo Finance tech editor Dan Howley broke it down with Josh Lipton on market domination.
Talking about the AI bubble and the discussion of the kind of frothiness and hype around the AI trade. And really, he kind of tried to hammer home a few points. One, he said that, there is an AI bubble at this point. He had specifically talked about a company that had 6 people but managed to raise billions of dollars at a $20 billion valuation. He didn't say exactly what that company was in particular, but did say that that's an issue. And something that is seen in times like this, where you see good companies and bad companies, good ideas and bad ideas get funding at times like this. But he also said that AI is a real kind of capability and something that will continue to grow and show real productivity gains in the future. So it's not as though this is kind of a vaporware scenario where, people are investing and waiting and well, it just doesn't show up. He believes that this is something that's going to boost companies and change businesses around the world. It's just a matter of which companies end up doing that and which don't. And he pointed out, the likes of OpenAI and Anthropic. And this has been, kind of an ongoing discussion we've seen at the same conference. Goldman Sachs CEO David Solomon had said that, there seems to be an AI bubble at this point, but pointed out that just as Amazon in particular gutted it out during the kind of pop that happened in the internet after the internet bubble, there will be companies that will gut it out as well with the AI bubble. And so it's just a matter of how many people do believe that this is a bubble, and if it is in fact a bubble, when does that pop?
Okay, before we go, let's have a check-in on the markets. And as we mentioned, gold hit an all-time high. And Bitcoin, well, it's hovering near its recent peak too. Now, oil as well is advanced after OPEC Plus yesterday agreed to revive just 137,000 barrels a day of halted supply, a slower pace than earlier this year. Let's move on to Asian boards now. And as we said earlier, Japan's Nikkei surging on that news that a new prime minister is likely to encourage more fiscal spending, and that looks set, and she looks set to take office later this month, remember? And that sent the Nikkei soaring, as you can see, just shy of 5%. Hong Kong's Hang Seng fell around 0.7%. That's ahead of a holiday tomorrow. Most other major share markets around the region were closed for holidays, including mainland China, South Korea and Taiwan. All right, let's move on to Europe now. And European stocks, well, they opened on the back foot in early trade. But as you can see, the FTSE now back in the green in London. But the CAC 40 is down quite heavily, as you would expect, and bigger declines than most in the region. Remember, last week, a number of these European indices hit record highs. So we'll have to see if that can continue. Okay, let's move on to see how Wall Street might open when the US opens later. And US equity futures are on the rise, as you can see there. Investors seemingly more confident that the Fed will continue to cut interest rates, and that seems to be the focus. Okay, well, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. I'm Ramzan Karmali. Go own the morning.